Hi, I'm Przemysław from Espeo Software, and for the past 9 years we have been working for some of the most disruptive token projects and crypto brands. Many of these companies are headquartered in Switzerland. We got curious, how is it possible that the Swiss crypto valley is responsible for a third of blockchain VC funding in Europe? More so, how did it reach a market cap of more than $500 billion in just a few years? That is why after finishing one of our projects, we decided to research this market. We got some pretty compelling answers, and today we want to share everything that we have learned with you.
You need to understand that there are three key pillars to any startup ecosystem growth. These are significant investment opportunities, supportive regulatory environment, ecosystem that surrounds the startups. Before we dive deeper into each of these pillars, I want you to better understand the market first.
At the time of writing, it is estimated to be worth almost $600 billion, with a majority of that valuation attributed to public companies. In 2024, it has grown surprisingly by more than 50%. According to a report by CVVC, almost all Swiss crypto companies are based in Zug. But why there? How come a small region just outside of Zurich attracted more than 1,200 blockchain-related companies in a few years?
In 2013, early Bitcoin entrepreneurs, facing a regulatory gray zone in many parts of the world, saw Switzerland, especially the canton of Zug, as a safe haven due to its low taxes and business-friendly policies. This attracted funders like those behind Bitcoin Swiss and later, key players such as Ethereum Foundation, whose establishment in Zug played a transformative role. Swiss authorities adopted a proactive, technology-neutral approach early on. Regulators like FINMA provided clear guidelines on ICOs and blockchain, granting early crypto banks like SEBA and Signum their license. This regulatory clarity offered the legal certainty that crypto entrepreneurs needed to innovate and grow. Zug even made headlines by accepting cryptocurrencies for municipal fees, reinforcing its commitment to digital innovation. We'll be mentioning the crypto valley many times in this video.
But let's zoom out a little bit and look at the three pillars we mentioned at the beginning. First, let's look at funding. Stick with us while we try to not flood you with numbers. In 2024, blockchain companies in Switzerland raised about 586 million across 56 deals. The region captured 5.2% of global blockchain funding, growing slightly on a year-to-year basis, and a record 29% of European blockchain funding, up from almost 19% in 2023. Later stage VC rounds have become more prominent, now accounting for 45% of total funding, indicating a shift toward more mature, high-value projects. Now, this is interesting because it is contrary to the rest of the world, where later stage rounds accounted for only 15% of all funding in 2024. I also want to show you which sectors managed to secure the most funding. Let me know in the comments if you are surprised. Centralized blockchain financial services captured 34% of the funding, while blockchain networks accounted for 29%. Decentralized finance, or DeFi, saw its share more than double, but the fastest growing segment was data management, verification and analytics, which jumped from 3.5% to 11%, with Nilion and Redstone both having received significant investment last year.
In contrast, sectors like gaming, NFTs and metaverse experienced a noticeable decline, dropping to less than 1% of total funding. The largest funding rounds were secured by a modular blockchain network Celestia, a digital asset bank Signum Bank, and the Open Network, a blockchain ecosystem developed by Telegram, which together accounted for almost half of all the funding. So there is money in the Swiss VC market. That's partly because it has attracted global investors such as Yatsu and his Animoca Brands Fund, but many other well-known brands have also invested in the Swiss crypto market last year. The long list includes Binance, Coinbase, Consensus and Electric Capital.
As you can see, the Swiss have managed to establish a very strong first pillar for building a growing and healthy crypto startup space. Now let's talk about the other one, without which the optimism required for VC investment would never occur in the first place. The Swiss government has done a very good job in establishing regulatory clarity for crypto companies and, as it seems, is doing its best not only to not interrupt the current growth but to establish regulatory framework framework for digital assets. This is extremely important. As we have recently mentioned in the State of DLT report, regulatory issues remain a top 3 blocker for new blockchain initiatives globally. The initial stance of the Swiss government on cryptocurrencies is pretty much summed up in this 10-second clip of Switzerland's former president Johann Schneider-Ammann.
I'm a liberal, and my function in our government is simply to say no.
But it doesn't mean that the government stood by its sidelines. Its focus has been on providing the most necessary frameworks. That is why FINMA, the Swiss Financial Market Supervisory Authority, began assessing digital currencies and blockchain's potential risk and benefits back in 2014, that is long before the first crypto hype. 4 years later, in 2018, FINMA issued its ICO guidelines, which outlined how different token types are to be treated under existing financial laws, but also what are the requirements for disclosure and conditions under which tokens may be classified as securities. The Swiss Federal Council saw that it wasn't enough and established a DLT task force, which aimed to propose new framework for digital assets. 2 years later, the Swiss DLT framework came into being, and as one of the first countries in the world, modernized Switzerland's securities law by formally recognizing tokenized securities and DLT trading systems. The framework also provided clear requirements for how to issue, transfer and use digital assets as collateral.
The canton of Zug, home of the Crypto Valley, updated its system a few years ago to allow tax payments into cryptocurrencies, raising the transaction limit from 100,000 francs to 1.5 million francs. As you can see, the Swiss have taken a very liberal stance on crypto regulation, but at the same time provided the necessary frameworks and guidelines to help businesses operate with less friction. Later on in the video, we will show you how Swiss crypto companies have managed to smoothly align with regulation in markets they operate in, such as with MiCA in the EU. Before that, we would like to highlight a third pillar, without which the Valley might have never been more than just an empty landscape of ideas. And that is the broad and supportive crypto ecosystem. Just as rivers allow a valley to flourish with life, it is the network of traditional financial institutions, universities, blockchain service providers, and crypto-savvy law firms that have made Crypto Valley more than just a name.
Together they create a safe haven for crypto companies to grow, experiment and expand internationally. You may think that traditional banks with their power and influence on the Swiss economy might want to maintain the status quo by, for example, lobbying against crypto regulation. However, major banks like Julius Baer, UBS and Zürcher Cantonal Bank have started offering digital asset services. PostFinance, Switzerland's state-owned bank, now offers direct crypto services to its clients as well. The Swiss Stock Exchange launched fully regulated digital securities trading, which set a precedent for institutional adoption. Many Swiss wealth managers and private banks now offer crypto assets management and structured financial products based on blockchain. So traditional finance landscape seems very open to blockchain adoption, with many banks pioneering in this space.
All of this, however, would not be possible without expertise. The source of this expertise is, of course, the educational system, which is very pro-crypto as well. The University of Zurich has a dedicated blockchain center researching DeFi, crypto economics, and smart contract security. ETH Zurich, one of the world's top-ranked technical universities, has been instrumental in cryptographic research, fueling projects like Ethereum. Vitalik Buterin spent time there, which might explain the similarity in naming. But also zero-knowledge proof advancements. Other universities also have their own blockchain labs and provide blockchain courses for students of computer science and finance. As if it wasn't enough, the Swiss blockchain businesses benefit from a strong ecosystem of service providers offering compliance, auditing, and technical infrastructure, but also world-renowned law firms specializing in fintech, crypto regulations, and Web3 governance.
We have seen how funding, backed by both local and global investors, regulations, thanks to forward-thinking bodies like FINMA, and a thriving ecosystem with universities, banks and service providers all on the board, are the three key pillars that make Switzerland's Crypto Valley so successful. And that, in a nutshell, is why this corner of Europe is the go-to place for blockchain and crypto innovation.
If you guys enjoyed this video, you are going to like this interview with David Bosshardt, who's a Swiss DeFi expert and very well explains the role of blockchain in Switzerland's financial landscape. So check it out right now, and as always, remember to stay on the block to stay ahead.